Good morning from our global headquarters in New York. I'm Menace Crenny. You're welcome to Bloomberg Brief. Let's set your agenda. The time has come. The Fed Chair, Jerome Powell, sends a clear sign of policy easing, giving global investors confidence to take on risk. Markets now turn their attention to another piece of the jigsaw puzzle as we count down to the health of the consumer and the PCE data. Over in the Middle East, Israel says it has stopped a planned Hezbollah assault after bombing Lebanon to thwart attacks. Good morning. That's the very personification of the juxtaposition in these markets between the geopolitical risk in the Middle East and a full-scale escalation and the Powell pivot, which is the time has come. That spirit of the time has come invoked a 1% rally in the S&P and in the NASDAQ on Friday. The question now becomes a debate as to whether the rate cut is 25, 50, and whether that becomes necessity or a choice. You can be pretty sure September the 6th is going to be like a sword of Damocles on risk in terms of that jobs number. It will absolutely define whether they need to cut with conviction or whether they can do a slow, mellifluous drift of 25, 25, and 25. NVIDIA is on the stumps this week on the 28th. That will be the vanguard of the AI revolution, as some people have said. Yields dropped on Friday considerably, down by 9 basis points. You've got 4 months of a rally in bonds. Hope there's something working in that 60-40 portfolio of mine. But bonds have rallied for the 4th month in a row. So you are looking at this narrative, whether that's fully priced now, for nearly 100 basis points of cuts in September. Torsten Slot warns over at Apollo, the market is way too far ahead of itself. There's no need for 4 rate cuts. It could indeed reignite inflation. And the dollar has quite literally flopped. It is in free fall. You've had a nice momentum in the yen, rallied for 2 days in a row, up by 1.76%. What you have here is, again, the juxtaposition on risk between equities. Likewise, that is part of what is driving the narrative in yen, not just the rate differential. Let's take a listen to the Chair Powell giving the green light to the beginning of this rate-cutting cycle. What shape and style it is, we will debate. Jackson Hole, Friday.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. While the task is not complete, we have made a good deal of progress toward that outcome. My confidence has grown that inflation is on a sustainable path back to 2%. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
His confidence is growing. Is Van Ram's confidence growing? That we're in for 100 basis points of cuts between now and the end of the year. Van, I posed the question at the top. We're caught between the juxtaposition this morning between geopolitics of where you're sitting in the Middle East and the narrative from the Fed. The debate now becomes whether they cut out of choice or necessity, and they are two very different cadences.
As of now, morning manners. As of now, they are doing it out of choice. But, you know, as you know, the August payrolls data will be crucial. And if that points to, that will tell us whether or not it will become a necessity. If it becomes a necessity, 100 basis points is eminently possible because, you know, one of the key messages from Fed was he didn't close the door toward a bigger move. He didn't say gradual. He didn't use the word gradual. He didn't say use the word modest. So he's left the door open for bigger rate cuts, and that means that, you know, the labor market is going to be crucial to how far the Fed goes and how fast the Fed goes from here. At the moment, though, it's a bit of choice.
Well, look, I describe the dollar as being in a form of free fall. The debate will be, of course, how hard is the landing in the United States of America, but it is the rate cut trajectory as well. Now, that's giving some succor to the euro, isn't it?
Absolutely, Manas. You know, one of the first articles that I wrote this year was making the case for a weaker dollar. It has been a delayed trade, but it is coming to fruition now. Having said that, you know, the dollar has fallen a whole lot. It's kind of oversold on the charts. So I expect a near-term feeble bounce, not a bounce with any kind of vengeance, not a bounce with conviction, but a feeble bounce. surely because it's oversold on the charts. But, there is the case that the ECB won't be able to cut rates nearly as fast and as much and as deeply as the Fed. And that will put a wind in the sails of the euro. I mean, the Fed's real policy rate is 270 basis points. That's staggering by any measure. If you look at the ECB's real policy rate, it's just about 90 basis points if you take into account core inflation. So the ECB won't be able to cut rates so much and so deep, and that's what the currency markets are fixated on, which is why the euro is rallying as much as it's done this month.
Then I've held many a call. I've held onto it. I've hugged it like hell. And you know what? Eventually they do come round. If you hug it for long enough, the position comes good. Ben, thank you very much, with a little bit of pain along the way. My guest this morning is Adarsh Sinha, co-head of Asia FX Rate Strategy at B of A Global Research. Good to have you with us this morning. So let's just sort of think about where we are. You say that Asia and the rest of the emerging markets, that's another quote that I'm going to use a little bit later on. Let's just debate the necessity of a 50 basis point cut or the choice to do a larger than 25 basis point cut. Where do you stand? How do you frame this cycle that we're about to go into?
Right. Good morning, Manus. So I'd agree with Ben. Right now, it's a choice rather than a necessity. And if I look at how Asia markets have been trading this morning, I mean, obviously the dollar has collapsed, but there's some signs of exhaustion in the short dollar trade, probably for the reasons Ben mentioned. Technically, it's a little bit oversold. But I think the market is now waiting to see whether there's a necessity. And as was alluded earlier, it really depends on the labor market. I mean, does the market care about the PC inflation numbers at the end of this week? Probably not. I would argue jobless claims this week is probably more important than the PC number. So the labor market numbers leading up to the payrolls will ultimately determine what Powell suggested. Is it necessary for them to cut faster than 25 basis points a meeting?
Yeah, it's interesting that you say jobless claims will take on a bigger protagonist for risk rather than the PCE on Friday. I'm interested in your view that the dollar sell-off is slightly exhausted. Some say it's in free fall, down 2.37% this month. What I want to get a sense from you, and especially because you're sitting in the Asia trade, is to whether there is a shift. And there is this narrative growing that there is a shift in the carry trade away from using yen as the carry vehicle to the dollar as a carry vehicle, and that the dollar actually will be used in the form of a renewed carry trade. Is there any veracity to that narrative that's building?
So firstly, no, it's too soon to say that. Funding in US dollars is still very expensive. But what I would say is in the Asia-Pacific region, we have seen a build-up of kind of a cyclical carry trade. So not the spec carry trade that we talk about by speculative investors, CTAs, hedge funds, and so forth. But to give you a couple of examples, corporates have built up FX and US dollar deposits over the past many years. And as the US dollar starts to weaken, they might think of unwinding that. Similarly, institutional investors like life insurance companies and pension funds have kept very low hedge ratios on their US assets, which is kind of like a carry trade, which works fine until the US dollar starts to weaken. So I'm a little bit concerned over the medium term that if some of these longer term carry plays start to unwind, then that could amplify the dollar depreciation trend, despite kind of the near term exhaustion that I talked about earlier.
And I presume that could be more amplified within the yen trade, or certainly give it another leg higher.
I would argue the yen is the one exception, actually, because in Japan, you haven't seen as much of a buildup of the structural carry trade. And in Japan, the carry trade played a role and it's unwound, but you have seen non-carry outflows. You've seen corporate FDI outflows from Japan for many years now, and we're seeing Japanese retail outflow that have very little to do with interest rate differentials. It has to do with the diversification of the household balance sheet that's very overweight cash. So the yen move, I think, is more done than the move in other currencies in Asia or the move in the euro, for instance. And if these structural outflows resume and if markets stay stable, then I think the yen should probably lag in any US dollar downtrend that we do see.
Let's just square away the euro. Ven had written a piece at the start of the year and he was hugging it to death, and we all know how that feels. But you would actually probably jump in with that. I mean, you're bearish on the dollar, as you say, But I'm curious as to whether it is the euro that will outperform, because I see that you've gone for a slightly higher level on the euro-dollar by the end of this year. But you're way out of consensus with where the euro-dollar trade will be next year. So this is quite a significant shift for the euro. Is that based on the differential between what the Fed can cut and the ECB will actually be able to cut?
Yeah. So, Manus, we've reached our year-end forecast of euro-dollar at 112. So we're planning to take the rest of the year off. But more seriously, I think when we think about the preferred dollar short, euro is maybe not the best risk reward. Yes, the ECB might cut somewhat slower than the Fed, but they're still going to be in an easing cycle. The currencies that we actually like to be short the US dollar are probably the pound and the Australian dollar. I mean, in the UK, Andrew Bailey did signal potentially a faster pace of rate cuts, so maybe a bit less about the rate differential. But if you think about Australia, the one central bank that's probably going to be cutting later than any other G10 central bank is the Reserve Bank of Australia, based on the data and their communication. So I think the pound sterling and the Australian dollar are preferred longs versus the US dollar if the dollar depreciation trend continues.
Where could you see pound and Aussie getting to in the near term? If you've got 117 on the euro dollar, where can cable go to on a tailwind with that? Right, so our year-end forecast for cable is 135, and beyond that, when we do expect euro to go higher, we could get closer to 140. I think Aussie, the one sort of headwind for the Aussie is China. So China is still very, very weak. China's imports of commodities are still very weak. So Aussie could probably get to 69, which is our year-end forecast. It might struggle to move above 70 unless and until we see some stabilization in Chinese import demand, which doesn't quite seem imminent yet. Adarsh, thank you so much for being with me. Nice, interesting nuance in terms of the shape and character of the carry trade. Adarsh Sinha of Bank of America Global Research. Thanks for being with me this morning. Setting the agenda. Other stories trending on your Bloomberg terminal this Monday morning. This is what we've got for you. Vice President Kamala Harris's campaign crosses the $500 million milestone. It raised $82 million during last week's convention in Chicago, pushing its total fundraising haul to $540 million since President Biden said he was not returning to re-election. China's budget spending shrinks. Income from land sales also fell at a record pace. Local governments have been cutting spending due to the housing downturn, intensifying calls for Beijing to add more stimulus. And in the Netherlands, the Dutch authorities fined Uber to $324 million for transferring personal data of European taxi drivers to the US. Uber has indicated its intent to object to the fine. So we have this mild risk on. As I say, we have this juxtaposition between geopolitics and the Powell pivot. You can just see here we're giving ever such a slight amount back on Bitcoin this morning. We did flirt with $65,000. We put on 7.5% last week. Ether also lower. Keep an eye on Toncoin, which is the token at the bottom. This is the 10th largest crypto base. Of course, it is backed by CEO Pavel Durov of Telegram, who was placed under arrest in France yesterday. So crypto is an interesting space right at the moment. Coming up, the Middle East remains on edge as Israel bombs Lebanon to stop what it calls a massive planned Hezbollah assault. That is next. And Antimo's Frank Monkam joins me around the desk. His call, 2 cuts for 2024, the context of what happens next from the Fed on Bloomberg.
It is incumbent on all parties in the region to work towards de-escalation and stability. And so we are feverishly working in Cairo as we speak with our team and the teams of the other mediators, as well as with the Israelis, to get to a ceasefire and hostage deal.
That was the U.S. National Security Advisor Jake Sullivan speaking after Israel bombed Lebanon, taking out thousands of Hezbollah missile launchers in what was called a preemptive strike. Jumana Basachi joins me now from the region. Jumana, yesterday's flare-up, and that's how it's being contextualized as, where does it leave us in terms of the Israel-Hezbollah tensions? Because both sides were waiting, one for the retaliation, but by lunchtime, the New York Times said, by breakfast time, both sides were employing language of containment. Is that your assessment?
That is most certainly the assessment of the Middle East about 24 hours on from those attacks and counterstrikes, as you just highlighted, Manas. The way I would describe it is a de-escalatory escalation is what we saw, because ever since the killing of that senior Hezbollah commander about a month ago, the whole region has been on tenterhooks waiting to see what the retaliation would look like, especially because Hezbollah, the Secretary General Hassan Nasrallah, has been saying consistently that there will be a retaliation. They will have to seek revenge for the killing of the senior commander. Well, we know that that attack came over the course of the weekend, late on Sunday evening, early Sunday morning, I should say. About 340 Katyusha rockets were fired into northern Israel, some directed towards central Israel. But of course, crucially, we know that Israel themselves engaged in a counterstrike, a preemptive attack on some of those rocket launchers, themselves saying that they intercepted thousands of rockets in what could have been a much worse attack. And so both sides are saying that this is somewhat of a victory. Israel saying that they foiled a much bigger attack that could have taken place. And Hezbollah, later in the afternoon, Hassan Nasrallah gave a speech saying that from his perspective, they did what they had to do. Phase 1 was a success, and they're going to assess whether more needs to be done, which tells you that for the time being, the tit for tat is over, and the region can once again go towards this relative period of calm in a wait-and-see mode to see whether there will be other retaliations. And particularly on that front, people are watching the reaction out of Iran very closely.
Yeah, I think the juxtaposition, as you describe it there, between a de-escalatory escalation. If you look at what was said to Lloyd Austin by the Israeli defense minister, discussing the importance of avoiding regional escalation, which then takes us to the framework and the backdrop for for ceasefire negotiations. Where does that stand? Because they did start yesterday, although perhaps one's assessment of that differs depending on the side that you're on.
Well, what was really interesting is that a couple of hours after that attack took place, an Israeli delegation went to Cairo to continue along with those ceasefire discussions, as if to say that their broader signal to the region is that the attack was done over, it was an incident that passed, and that they had to continue on with these ceasefire efforts. And we know, of course, that it has been a major focus of the Biden administration. It came up in the DNC last week. Kamala Harris specifically referenced the need to get a ceasefire deal passed across the line. Secretary of State Blinken, 9 trips to the region so far, met with Netanyahu last week, and there seem to be some positive signals coming through. But now it has emerged that one of the major sticking points vis-a-vis those ceasefire discussions is what happens to that so-called Philadelphia corridor, that is the border separating Gaza from Egypt. Israel are insisting on maintaining a security presence there. That is a no-go for both Hamas and even Egypt themselves. And so the question here is whether more compromises can be made to ensure that all sides and all parties who are participating in these discussions feel that they're being represented and their needs represented. And ultimately, the goal here, which is what the U.S. administration and the international community have been pressing for, is a cessation of hostilities, but also the exchange of hostages and Palestinian political prisoners. And it still appears as though there's a lot of daylight between all of these sides, despite the U.S.'s best efforts.
Jumana, thank you very much. Jumana Basachi in Dubai. Coming up, NASA picks SpaceX over Boeing in the efforts to bring astronauts home. And more headlines from around the world, setting the agenda right here on Bloomberg Brief for your trading week. Good morning from New York. It's Bloomberg Brief. I'm Adarsh Sinha in New York. Front pages. This is what's making the headlines this Monday morning around the world. First up, the Washington Post. Donald Trump suggests he might skip the ABC debate with Kamala Harris scheduled for September the 10th. He made the suggestion on a social media post on Sunday night. Now, this is not the first time that Trump has indicated he would back out of the ABC News debate. Next up, the Wall Street Journal reports that IBM is shutting down its China R&D department. It's just the latest move of retreat from the country, I should say, by the top U.S. technology companies. It will affect more than 1,000 employees. And Bloomberg leads with another setback for Boeing. NASA, it's turning, it's turning to SpaceX to bring home the astronauts who are forced to extend their stay at the International Space Station due to technical issues with their Boeing aircraft. We've had a conversation about currencies in this past 30 minutes. Is the dollar's drop? It is a slightly better bid this morning, but it has lost nearly 2.3% against the yen in this month. Is the dollar's sell-off overdone? It is geopolitics and the response from Hezbollah and Israel that has driven a little bit of a more of a tone to the dollar this morning. Bank of America say the dollar is short-term exhausted. Jobless claims will be more important than the PCE. They've got 112 on the board. They're done for this year. They've hit their target for this year on euro dollar, 117 for next year, and that the yen carry trade is pretty much undone. Coming up, we'll return to the narrative from Jay Powell. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. The time has come. Fed Chair Powell's clear signal of policy easing gives global investors the confidence to take on risk. Markets now look ahead to another piece of the jigsaw puzzle. We count down to a rate cut, the health of the consumer and the PCE data. Over in the Middle East, Israel says it has stopped a planned Hezbollah assault by bombing Lebanon over the weekend. Good morning. We're juxtaposed between the Powell pivot to rate cuts are coming to the geopolitical tensions in the Middle East and perhaps an expansion of the proxy wars. We'll discuss that in just a moment with Bobby Ghosh. SPOOs at the moment are up 0.1%. Again, the sword of Damocles will be September the 6th in terms of the jobs numbers, and that will really raise the temperature on the debate between a 50 basis point cut and a 25 basis point cut. But be sure of this, if you get a low-grade jobs number, you're going to get cuts with conviction. And Powell did not use the word gradual, which leaves him a great deal of optionality. NVIDIA will be on the blocks on the 28th, so all eyes are down on that in terms of driving the risk narrative for equities. We put on 1% on Friday. We're now up 1 1/8 from Friday, so equity risk is definitely in the plus zone. The vanguard of AI will be the driver. Bond markets, you lost 9 basis points on Friday at the very short end of the curve. There is a warning from Torsten Slok at Apollo who says the market is so way ahead of itself. There's no need for 4 rate cuts. And if anything, it could reignite inflation. The yen is stronger this morning. The dollar is down. I mean, the dollar, some would say, is in free fall. Bank of America say that the sell-off in the dollar is overdone, but you've had a 2-day rally in the yen of over 1.76%. Helping that along is, of course, the discomfort of the geopolitical situation between Israel and Hamas. Let's take a listen to the Fed Chair, Jerome Powell, the Fed President. He weighed in on the rate path at Jackson Hole.
My confidence has grown that inflation is on a sustainable path back to 2%.
Down to 2%. Or 2% goal.
The cooling in labor market conditions is unmistakable.
It really starts to tell me that things are much more imbalanced than they have been for quite some time. In the real rate sense, we've been tightening, and when the conditions are not overheating, you got to be really careful with that kind of passive tightening.
I like the word methodical. That's what I'm hearing from my contacts.
The time has come for policy to adjust.
Well, Frank Monkam is my guest this morning, Senior Portfolio Manager at Antimo, weighing in on the risk of a Fed pivot. Writing this, volatility is likely to return post-Labor Day. Base cases for 2 cuts, September, perhaps December, should growth continue to moderate at the current pace. There's no need to move with aggressive jumbo cutting cycle unless the economy warrants it. Frank, good morning to you. We've got a feast this week of confidence, of PCE at the end of the week, but the jobless claims come in the middle. I said the jobs report is going to be like a sword of Damocles for this market. Just contextualize for me how important September the 6th will be in reaffirming your two-cut call.
Yeah, absolutely. Thanks, Matt, for having me today here from Washington, D.C. Obviously, there's the Fed now has a green light to start the cutting cycle, given how, inflation has been dropping sequentially. We've got, 1.6% core CPI now on a 3-month basis. Inflation ex shelter is right around flat on a 3-month basis as well. So the narrative really is shifted from inflation over the growth side of the mandate. And obviously, we had a little growth scare with the NFP miss, a couple of weeks ago, but for the month of July. So this NFP coming up for the month of August in a couple of weeks is really crucial for the Fed. And I think the bogey for us really is the 75K sort of threshold on NFP, and potentially 4.4 to 4.5% on NFP is on unemployment rate rather is what could potentially tip the Fed over to easing. A little bit more swiftness, maybe 50 basis points. But our base case is 25 basis points set, and kind of wait and see whether the July print on NFP was a blip, and kind of adjust course from there.
I like you got your golfing references in there. How disappointed are we going to be, Frank, if this transpires to be 25 basis points and not 50?
Can you repeat that? Sorry, Manis?
Sure. How disappointed do you think these markets are in risk? You look at equities near all-time highs. You look at credit spreads being well-behaved.
Yeah.
I look at the dollar flopping. How disappointed will the pro-risk camp be if it's 25, not 50?
Instead of 50 for the month for September?
Yeah.
I think the consensus now is probably around 25. So I don't think markets will be hugely disappointed if we do get 25 instead of 50. But I think the reason, the real thing behind it is why do we get 50, right? If we get 50 because there's a real growth scare, let's say we print something like 50K NFP or perhaps 4.5% unemployment, that could be really spooky for risk assets. So I think markets really have to be careful as to the reason behind whether we get 50 or 25.
I love your skepticism. You've looked at volatility. I know you've looked at multiple volatilities from FX to MOV on the bonds to the VIX. You would say that the recent bounce in equity markets and the sell-off in volatility is actually an opportunity to load up on puts.
Yeah. I mean, we've been looking at volatility for quite a while. I mean, I was on the program in the early part of the summer, kind of beating the drum on, being long volatility. It obviously played out right around the August 5th VIX spike. And we've seen a very, very swift retracement in volatility. Basically, a 10% turnaround in performance on the S&P, which has collapsed volatility kind of overnight from 65, which is kind of a near all-time high, so now 15. We think volatility is back to being on the cheap again here. When you look at volatility really versus kind of the cross-asset volatility complex, so we're talking about volatility across other asset classes, such as the bond market with the MOVE index, FX volatility, even the VVIX, which is the volatility of the VIX, the VIX really looks cheap where it is right now, especially given the risk landscape that's still ahead of us with the election cycle and the return of really, frankly, liquidity after Labor Day. One of the things we've been telling our clients over the last couple of weeks is we have to be mindful of the fact that liquidity rather really works both ways, right? I mean, the turnaround that we've seen on the VIX and even on equities is probably attributed to the fact that liquidity rather hasn't really been present in the marketplace. So we have actually a rating on the VIX right now, which is we rating the VIX as in being rated PG-13. And the reason behind that is we ran a study on the VIX over the last 30 years, and we realized that every time the VIX were to pop up above the 13 sort of level, after being below that for a little while, which is the case which has been the case over the last couple of months, we tend to remain in a higher volatility regime where the VIX tend to average about 20 to 25. And I think it's very likely that we see that, especially given how tight the U.S. elections have come to be now. We think that it's going to be a very tight race. And historically, every time we've seen such setups around the election times, the VIX has really been spiking. We saw it 4 years ago when the VIX popped up from 22 to 42. from Labor Day to Election Day, and we think there's a significant risk that we see a repeat of that this year.
Well, they've got the beautiful game, and you've got the beautiful hedge. So we'll know what to do to load up on that. Look, I'm curious. I've been sort of pushed back by Bank of America this morning. I was sort of like really excited about the carry trade, pro risk, maybe even using the dollar. And Bank of America were going, no, I don't know what you've had for the weekend, but we're not having any of that trade talk out of you. What I want to get a sense from you is the bond market has really sort of ramped up and got quite ahead of itself, some people have said to me. Yeah. And it goes back to the second question that I asked you, which is, what is the risk of disappointment if we get 25 basis points rather than 50 basis points in September? You said to me, minus 25 basis points is the built-in consensus, accepted consensus figure. But if we look at the bond market, it looks a little bit stretched. Do you think it's rich?
I do think we're probably a tad rich here at this stage of the cycle. I mean, clearly, whenever you start hearing clear signs of the Fed pivoting into the monetary cycle, you're going to get this Pavlovian sort of reaction function of people buying kind of, bonds and treasury bonds hand over fist. So that's normal. But I think what's happening in the bond market, in my view, is this tug of war between the cyclical and the fiscal. On the cyclical side of things, you've got the Fed easing, so obviously you've got to respect that. Whether we get a recession or not, I mean, that's obviously going to be very positive for rates market. But I think once we get a clarity on what the path of that easing cycle is really going to look like, and my hunch is that it's probably going to be a shallow easing cycle because I think the U.S. economy is fine. We've got equities at all-time highs. Financial conditions are easing. So I think we're going to shift away from trading the cyclical to really trading the fiscal. And the fiscal really is a structural issue that's still plaguing, the bond market here with a ton of supply coming online going into next year. You've got, again, we talked about the election cycle. I mean, regardless of really who really gets in the White House, and I'm speaking of that, based out here in D.C., I think it's consensus that no matter who gets in there, we're still going to be...
It's going to be a volatile time.
Facing a
Frank, we got to wrap it up there from DC, as you say. It could be the fulcrum of all the vol going into the back quarter. Choice, not necessity, of rate cuts from the Fed. Antimo's Frank Monkam, my guest this morning. Coming up on the show, tensions remain high in the Middle East as Israeli warplanes bomb Lebanon over the weekend. We discuss right here. Context Matters on Bloomberg.
It is incumbent on all parties in the region to work towards de-escalation and stability. And so we are feverishly working in Cairo as we speak with our team and the teams of the other mediators, as well as with the Israelis, to get to a ceasefire and hostage deal.
That was the U.S. National Security Advisor Jake Sullivan. The Middle East remains on edge after Israel bombed Lebanon over the weekend, taking out thousands of Hezbollah missile launchers in what was called a preemptive strike. Bobby Ghosh joins me around the desk this morning. So this is the long-awaited response, Bobby, from one of the proxies of Iran, from Hezbollah into Israel. Israel preemptive strike on Hezbollah, but they were very quick to sort of call a de-escalation from this. Do you think that that's the correct way to view the current conflict?
Well, the language coming out of Hezbollah suggests that this was their part. They've done their part. They claim they fired off 320 rockets. They fired at 10 different military bases within Israel. They've given Israel a shellacking. And if you listen to Nasser Nasrallah, the Hezbollah leader's language yesterday, there's a suggestion that, okay, we've given the Israelis what for. The expectation since the assassinations of Fuad Shukr in Beirut and Ismail Haniyeh in Tehran has been that there would be a coordinated response. Hezbollah, Iran, the Iraqi militias, as well as the Houthis in Yemen would all respond. So the question is this the first of the four? Is Hezbollah now done, and now will the others join this effort? There was a big Shia Muslim festival, religious period, 40 days, that ended yesterday or today, depending on how you look at the calendar. And that was, the expectation was once that period was ended, that's when the Iraqi militias and the Iranians would respond. That's why the markets are still spooked. That's why the oil prices are up. There's a fear and expectation that we've only seen the first of several responses.
As you said, there could be several waves to come. Yet at the same time, it must be said that the ceasefire negotiations continued. I know Hamas left those negotiations yesterday evening, but the framework and the construct of what Sullivan and Blinken went to the region for the 9th time last week. How would you describe those discussions?
Well, the fact that the discussions continued is a good sign. Yes, Hamas is still saying that the Israelis are asking for, are setting new demands and making negotiations impossible. The Israelis are saying Hamas.
But isn't that the theater of negotiation?
But that's you're exactly right. That's how negotiations are meant to go. There's meant to be this sort of give and take, and in the background, and whereas in the foreground, each side is blaming the others for the absence of progress. So as long as that continues, it should be seen as a good sign. Better talk than not talk at all. But the military activities that are taking place are sort of have an influence on everything that's going on. Should there be now a direct response from Iran, or should the Houthis fire off a big barrage of rockets? Should they attack targets in the Red Sea? It will have a bearing on the negotiators. It will have a bearing on the American view of the situation. Everyone is hoping for a de-escalation. But the two sides that are in the actual combat with the Israelis and Hamas, not yet.
I was speaking to Jumana Bisachi a little bit earlier. So the entire Middle East operation, reporting on this on an ongoing basis from Israel and from the Middle East. And she described it as being a de-escalatory escalation. And I think this is what we need to talk about, Iran's response. We have seen Iran's direct response onto Israel earlier in the year. Yes. And it's now a question of understanding, perhaps, the size and the scale of that response. That may well be the final demarcation. Well, one can never say final in these things, but that's going to be the critical issue.
Yes, it is. The way Iran responds is going to be crucial. It's taken a while now.
Yeah.
The Arbaeen religious period may be one explanation. Remember, Iran has had some political turmoil of its own. President died, a new election was held very quickly. Relative to the dead president, a more moderate figure was elected president. There is some political churn that's taking place. The Iranians are also very aware that if they overplay their hand, if their response is too hard, then they're risking not just the wrath of Israel coming down on them, but an American response. The Americans have sent in lots of military hardware into the region, including a aircraft carrier group and a missile submarine group. So daggers are still in their sheath, but there are plenty of daggers now in play in the region. And Iran has to be aware that it has to calibrate its response just so that it makes a mark without setting off a sequence of events that then it cannot control.
And just on the other side of that, you've got the Israeli Defense Minister, Yoav Gallant, speaking to Lloyd Austin, and he said, it's interesting, he said, we discussed the importance of avoiding regional escalation. So it's the language. Yeah. It's the language and the framing that nobody wants this to go to sort of Mach 3. I think that's the sense. Bobby.
All the three sides are making all the Israelis as well as Iran are making the same kind of noises. And I suppose in a region where it's so hard to find, we have to take optimism from that.
Bobby, thank you very much for joining me this morning. Bobby Ghosh on the Middle East situation. Coming up on the show, we'll set the agenda for the rest of the week. Everything you ever wanted from retail sales, through to the tech earnings. It's NVIDIA, in case you didn't realize. So a lot of people's wealth could take a bid or an offer quite aggressively on the back of that. Good morning from a beautiful New York. Bloomberg Brief this Monday morning. I'm Adarsh Sinha in New York. Your day ahead looks a little bit like this. Durable goods data, 8:30 a.m. Eastern time, and then we count down to Mary Daly joining the Bloomberg team, Fed President over at San Francisco. She joins the team with Mike McKee. That is at 2 p.m. today. Looking ahead to the rest of the week, I mean, it really is going to be crucial what NVIDIA earnings are on Wednesday. The godfather of AI, Jensen Huang, as Wedbush Securities like to call him. We'll also get a read on the consumer this week. You've got Nordstrom, Best Buy, Gap, and Dollar General all hitting the tape. Let's get you a little bit of a flavor of what you can expect there. Jennifer Bartashis, Bloomberg Intelligence Senior Retail Analyst, joins me now. Good to have you with us. So we've heard from Walmart and Target in the past 2 weeks. And that really was a glimpse into the soul of the consumer, trading down, looking for value, and a hint of caution. What do you expect from these retailers this week? Good morning.
Good morning. Thanks for having me on. When we're looking ahead at retail earnings this week, it's a little bit of a continuation of last week. I think we're going to continue to see the impact of consumers trading down. That should benefit companies like Five Below, Dollar General, but it'll be a little bit more challenging for the Best Buys of the world, perhaps a little bit for Nordstrom as well. So, consumers are looking for value, and it's really turning into a story about execution by these individual companies and how well they're meeting that customer definition of value for their particular brand.
Yeah, and look, it depends in which area you're looking at, whether it's clothing, whether it's home improvements, whether it's the big stores. You just look at Macy's, obviously, choosy customers, they're trying to cut prices. Then you look at companies like Gap, which are in the turnaround story. But this is going to come down to margin, and a lot of the retailers have been posting better margin expansion. But the question is, does that show up in this clutch of earnings, and how can that endure?
Actually, we think that margins for the retailers reporting this week are going to be a little bit of a different story. And the real reason behind that is when you're talking about the Walmarts of the world, the Targets of the world, they're starting to really get benefit from what they consider alternative revenue streams. That's from advertising, that's from that sort of thing. And companies like Five Below, much smaller, don't really have that. Dollar General still in the early stages. Best Buy, again, same sort of thing, and they're also pressured by the fact that they sell a lot of appliances and bigger ticket items that customers are pulling back on. Nordstrom is another story. We're seeing fewer markdowns in stores, so they may actually have a little bit of opportunity for margin expansion. But this week, it's a little bit more cautious on the margin outlook.
So tell me this then, what sort of trade-offs or trade-downs are consumers prepared to make? And I suppose the question is then, who benefits in that in the longer-term trend?
Generally speaking, the retailers that are, that cater to that middle-income, lower middle-income consumer benefit when people are trading down, because you see higher-income households coming down into the dollar stores. So generally, they do benefit, but we've had some missteps by the management teams at these companies, and so it's about also executing well on the retail basics. Are your stores clean? Are they filled with boxes, or are they easy to navigate? Those are the kinds of things where it turns customers off. So the better they execute, the more likely they are to be able to turn around those sales trends.
Jennifer, thank you very much. Let's see what those retailers deliver for us. Jennifer Bartashis of Bloomberg Intelligence. That's your Monday edition of Bloomberg Brief. Jonathan and the team are back on surveillance today. They'll count you down through the next 3 hours. Over to surveillance. Good morning.